Hello, fellow traders. Mark Abramsky from Forex on Dress. We're just going to review how to use buy stops, sell limits, and buy limits today. Once again, you can see there should be always a reason for placing the trades and where you place the trades, even if you're using these kinds of orders. Sell stops and buy stops are pending orders. In other words, they're not market execution orders. In other words, you're not entering in at the market, but you're only entering in if price reaches a certain area. So where do you put a sell stop? In other words, you can see here that on the 4-hour chart, the Great Britain pound moved down sharply on Friday, and it may fall even further yet. So if I want to take advantage of that using a sell stop, remember, sell stops go below market price, okay? Sell limits go above market price. Remember, we covered that in the other videos, so up here and down here. So if we want to put a sell stop and take the break of the previous low, which was right down here, and we'll use our little cursor here, and we'll bring it down here. We'll see the previous low was around 6281. That's this little area, the little dip, you see here, 6281. So if I want to take advantage of that move, what I do is I go to the Great Britain pound. I click on it. You see the order brings up the size of the account. Size of the account's almost 500,000, so 5 lots is fine for me as far as volume goes. And I go pending order. Remember how we did that from our previous video? We go sell stop, and then we put it down here where it's, see the price? We have to choose the price. So we have to click it down by using these up or down arrows, and I'm doing that. And you see it goes right down, and I put it slightly below the previous dip in the market, remember, which was 281. So there it is. You see it 278 is where I have. Now I won't be in the market unless price action, which is this little tiny white line bouncing around here, comes down and breaks the previous low and continues lower. Okay, and then we have to have, we can put our stop losses in here, and we'll get to that later. And we can put our targets in. We have to once again have an area where we want to take profits, and we want to have an idea of where we want to get out of the market if we're wrong, right? So that is a sell stop. If we want to do a sell limit, then remember it has to be above market price because it's a sell. Okay, so a sell limit would be simply we do the same thing, and we click on the volume was once again around 1-to-1 leverage, which is because it's almost a $500,000 account. That's 5 lots, which is 500,000, so it's almost 1-to-1 leverage. I'll make a lot of money even with 1-to-1. And I go the sell limit, which is above the market price, which is right at 6336 right now. So I just put it up here, and you can see I have to scroll up because if I try to scroll down on a sell limit and go below, the computer won't let me, or the software won't let me place the order. And you see I put it up here somewhere. So what happens is the market has to come up, this price action has to come up and hit it, and then I'll be in the market. And then what I think is that the price will fall from there. So that's called a sell limit. All right, now we just go down here. If we want to get rid of those orders, we go down to see the two Great Britain pound US dollar ones that I just put in, and we X off them. There's one, two, and it disappears from our screen. Interesting, eh? What about to buy them? What if I think price is going to continue up, but I'm not sure that I want to take a market order? Well, then I do the same thing. Remember, a buy limit, price has to be below because it's a buy, the market, and so I just do the same thing. I click on that. I have roughly 1-to-1 leverage. I can use more depending, but I have other orders floating around right now, so I don't want to. So I scroll down. See, I push the arrow down and it drops price. And say I may go in at the 6253 area. So price would have to come down below the previous dip. And 6250, let's say it's close enough. See, so the price would have to come down, break the previous low. That would be my reason. And then take out the stops there. And then I'd be into the market. Maybe it'll come back up again. What's a buy stop? Of course, a buy stop is just the opposite. I have to be above the market price, which is right here. You can see the little white line. And I go over to my up arrow because it always enters me in at the market price. And I have to move. You see how the entry is moving up here? See how it's moving up, 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 up? That's where it has to go because I'll say I want to have price at least break the previous high here before I get in. And I'll place it now. Okay, could see I was invalid, and that's because I had a buy limit. I need a buy stop. Now I place it. There it is, just above where the previous high was here. If we use our cursor right at around the, oops, right at around the 1.6363 area. So it has to come up. Price has to come up from where it is here, and it hit my order before I'll be in. And my target might be up here at the monthly support, the weekly resistance. That's the ZMFX. And where am I going to get out? Maybe when it breaks the previous dip. That's when I decide, okay, I'm wrong and I have to get out if that's the case. I'm just giving you an example. That's how you place the orders. That's buy limits, buy stops, sell limits, and sell stops. That's the lesson for the day. We'll learn how to use the systems to place these kinds of orders on the next video. So have a great day and stay tuned.